The equity markets can't have a considerable bottom without Treasuries putting in a bottom. Read and react. That's what we're doing. There are two charts that are at the top of my list that I'm following right now. And the market is like 100% correlated. It follows in lockstep Treasuries and the US dollar. It doesn't always do that, but the market we're in right now, that is all you need to do. If you said to me, what are the two things I have to look at? I would say that's it. Watch TLT, which is long dated Treasuries, which is most affected by rate decisions. Okay. The longer the duration, the more price movement. And the US dollar, which is having a rally. I don't know. Somebody can challenge me on this, but having a rally probably never before seen in history. I mean, it's an unreal run in the dollar this year that's breaking down a lot of correlations. And I think it's going to show in a very short order. I think we're going to start to see which emperors are not wearing clothes. I see some hedge funds this weekend. I just saw one of the major hedge funds is down 50% for the year. So that's a bust. I mean, they're going to go broke. They're going to close their doors. I mean, you have a 50% down year in a hedge fund and you're done. Okay. So that's just one example. There are many blowups coming, and it's a question of, it kind of feeds on itself until it crescendos. So I'm looking at first Treasuries. Treasuries keep going lower. How can the market have it can't. The equity markets can't have a considerable bottom without Treasuries putting in a bottom. And Treasuries are not showing you any confirmation of that rally on Thursday. Look at Treasuries. They're just locked in a downtrend. The other thing is here, the dollar. Okay, this is the key. This is really the key to me. So this move in the dollar is just unheard of against a basket of currencies. It's just crushing all kinds of normal, a bell curve of expectations. And you have to understand, risk departments use these bell curves, right? Hedge funds and institutions, they use these curves on interest rates and currencies and all these different things, and they figure out what kind of risk they can take with a reasonable amount of probability. Okay, this is way outside a reasonable amount of probability, what's going on in the dollar. And so you can believe there's blowups out there. And we haven't heard about them yet. Some we have, but there's others out there we haven't heard about yet. Okay. Maybe they're in the private equity space, right? There's just major blowups if this continues. And so what you heard last week from different central bankers is that they're, quote, going to get together and address currency fluctuations. If the Thursday reversal holds and the market goes up next week, I submit to you, it will be because the dollar is going down, which will be the tell that central banks are intervening. And when central banks intervene, equities go up. We've learned that like Pavlov's dog. So I'm watching the dollar. Is that a double top? If it's a double top and the dollar takes out the low of Thursday, then my guess is the risk monitor will be green and I'll be putting money to work. It's not necessarily that central banks can completely stop the dollar from skyrocketing if there's other issues out there. But this sell-off right here, from this top to the bottom of this channel, right in here on the dollar, led to a 20% increase in the Qs, and the S&P, I think, was up 20% as well, in about 24 trading days, simply because the dollar was suppressed. For whatever reasons, the central banks didn't talk about it then. They're talking about it now. I don't know if that's a good thing or a bad thing. When they all start talking about it, usually it means there's a panic that's starting to brew. So I don't know. The dollar could blow out the top side of this for all I know. But that's the most important chart to watch going forward. Does the dollar make a new high? UUP is the ETF. If it does, market's in big trouble. But if that turns into a double top and it starts trending down, we have a window to make money in the equity market. I don't know if it's going to be the beginning of the next risk-on trade that lasts for months, or if it's just another 10 to 20% rally in a bear market. We'll have to figure that out next.